Hello, it is the 13th of July, 2011, and this is the second video of the day. I want to go over some things that I didn't point out in the first video. First one is that the price is continuing to proceed towards the upside. Just because you're at an area where you're supposed to find resistance doesn't mean that you will. It's going through each one of these barriers one by one so far. There's four of them. We've gotten by two. We still may find resistance at this one, not too sure. The second thing I want to go over is I've seen a lot of V and reverse V formations where the markets have nice up moves and then they just crash down just as fast as they went up, or vice versa, where markets may go down fast and then back higher. And I'm talking mainly shorter term time frames, 1 minute, 5 minute, 30-minute time frame. Not so much on the longer term, although it's happening here. There's a V-shaped formation in here, and well, that's about it. However, just something to point out, watch out for. It may happen, may not, but I've also been looking at this pattern and seeing what I call a reverse Bart Simpson head formation, and that's the name I made. It's a Bart Simpson and reverse because the pattern looks something like when you go up and then you build the head with a small volatility like Bart Simpson's head and then back down. And then you got Bart Simpson's head. I'm not good at drawing pictures like that. But this is the reverse formation of it. It goes down and then it's doing all this choppy action. The best way to explain this is on a negative cycle, you crash hard, you consolidate, and then it just skyrockets as fast as it went down. And on the normal pattern is when you go really high, and then you crash fast as you go to the upside. This one would be a bullish scenario. If it makes a pattern like this, goes sideways, and then has a skyrocketing move higher, that's bullish. Now, don't expect this to happen. However, be alert or look out for it if it does happen instead, because the chances that we go parabolic from really 34 up to 50 is extremely low. It could happen, but if it does, then there would be no reason at this point. I'm just going to finish it off there because I don't think it's going to happen. However, if it does get there, it's wild volatility movement. Well, that's what we're seeing in here is that the continued move has managed this to have a significant breakout pattern, the trend over, and starting a pattern of higher lows and higher highs. Finally, I was making this chart earlier this morning, and I decided that I really wasn't going to upload it, although I really am because you're seeing it, and it's the gold chart going back to 2001. It's got two moving averages in here. This is I can't remember. I think it's a 10 and 40 or 20 and 50, something like that. I can't remember offhand. However, Fibonacci, that's what I want to focus on. These are automated Fibonacci levels. It's been staying above the 38.2% for pretty much, or this level here, entire run. And for the most part, it's even been staying above this level here. Why? Because the market is extremely bullish. There's been a major pattern of higher highs and higher lows. And a nice little interesting indicator that you can come up with, which is very close to stochastics, which is simply how much you have retraced from the significant Fibonacci point. What you do is you take the log function and you take a current price from an X period low. And then you take the X period high and you divide it by the X period low here, and that gives you your Fibonacci retracement. If you're above 61.8%, then you're flat out bullish. And it's only been not bullish in here, and in here. Above the second line is where you're basically super bullish, which has pretty much been the majority of the time. And the next Fibonacci level after that's like 85.6%, which would be from there. So it's been a very powerful upward trend for the last quite a few years so far. It has not been bearish whatsoever on a long-term time frame. with a brief second in 2008. Alrighty, and you can use this for any chart too. If you and you can use this for any time frame, 50 periods, 100 periods. And thank you for watching, and have yourself a great day.